Hello, business owners and entrepreneurs. My name's Aaron March, and in this video, we're going to have a look at how to structure your business. For me, business structuring comes down to three key things: asset protection, tax efficiency, and intergenerational wealth planning. Now, think of your business or your assets as this ball. You can move them from different types of structure, and each of them has different legal and commercial consequences. So in this video, we're going to run through, somewhere between 7 or 8 different variations of structuring. So let's get into it. With our structuring examples, we're going to follow through a case study with a young couple called Jack and Diane. Now, Jack was going to grow up and be a football star, but he did his knee, and so he needed to find another way to make a living. So he went out and bought a truck and became an owner-operator truck driver. And to make it simple, he operated as a sole trader, just in his own name, just got an ABN, and he was away. The great news is that very quickly, the business became very profitable. But something Jack noticed pretty quickly was that he would get some pretty significant tax bills because all of the income was taxed at his level as an individual at marginal tax rates. Another thing that was on his mind was that him and Diane jointly owned their main residence, their house together. And so over time, he became more and more concerned that if something went wrong at the business, not only the business and his trucks are at risk, but also the couple's main residence was at risk. So they started to look for another option. The search for a new business structure has coincided with growth of the business, and Diane has joined the business full-time to run the operations of the business. Jack's just going to stay driving the trucks. So the couple have decided to use a family trust to structure their business. What this has done is move the assets out of Jack's name and into the name of the family trust. And in doing so, the couple have been able to improve their asset protection position. Also with a family trust, with the profits at the end of the year, you can split it between a husband and wife couple, say 50-50. And this improves their tax position because they're able to get access to 2 sets of marginal tax rates, which improves their tax efficiency. By moving to a family trust, the couple have achieved their 2 goals of improving their asset protection position and improving their tax efficiencies. Now, let's fast forward a couple of years. Now the business has grown to be, fairly substantial. Now it's say got 30 staff and it's got 20 trucks and it's making really big profits. They've got that old problem again that they're paying significant tax bills because the profits are still getting taxed in the name of 2 individuals at marginal tax rates. Something else that's popped up is that Jack and Diane really want to reward and incentivize their key staff by giving the opportunity to have ownership in the business. However, you can't do that through a family trust. So the search for a new structure kicks off again. So next, Jack and Diane have gone with a company and they've gone and set it up, and they've set themselves up as individually 50-50 shareholders in the company. This creates an asset protection problem because it's put assets back in their own names. So the shares in the company is where all the couple's wealth is, and now that's at risk should they get sued for any reason. So a better alternative to when you're setting up your company is to have it owned by a family trust. What that does, it means the assets are owned by the family trust and they're not owned in the name of the individuals. So if these individuals get sued, the assets or the shares of the company aren't at risk. The other key advantage of trading in a company is the tax rate. They're able to access the corporate tax rate, which is either 25% or 30%. And so again, that ability to retain your earnings at the corporate tax rates to fund growth can have a huge impact. Compare those rates to the top marginal rates that they're paying as individuals, 49%. The other thing that happens is that a company is what we call a separate legal entity that is separate and distinct from its owners. And a company also has limited liability, which means that if a company gets sued, only the assets of the company are at risk. So importantly, what that means is, remember, Jack and Diane had their house. By trading in company, what you've done, you've put in place a firewall that helps protect their personal assets. So by moving to trading out of a company owned by a trust, they've been able to, again, improve their asset protection position because of limited liability and separate legal entity. And they've also been able to improve their tax efficiencies by accessing the corporate tax rate. Okay, so things are going really great for Jack and Diane, and they're now looking to buy an investment property. This could be any type of property. It could be a residential or whatever, But for them, in this case, it's going to be a commercial property, and it's the property where they operate their business from. It's where they store their trucks and all of their equipment. So you could buy this in a few different options or a few structuring options. You could put it into a family trust, similarly to how they own their shares. If they were going to own it with somebody else, you could own it in a unit trust. But for this couple, they're planning for their retirement. So they're going to buy it in a self-managed super fund. They don't quite have enough money to buy the whole property outright in their super fund. So they're going to borrow within their super fund to be able to afford the purchase. What they're going to do then is they will rent the property from the super fund back to the trading business. What this strategy again does, similarly to the house, it builds in this firewall and builds in that layer of asset protection and keeps their passive assets separate from their active assets. So things just keep getting better and better for Jack and Diane. Their business has exploded. Everything's going well. They're now at the position where they've got millions of dollars worth of trucks. And what this has done, however, has created concerns for Diane. She's concerned that having so many assets mixed in with the trading of the company, that everything's sort of at risk. So the next step of what you can do with structuring is that you can start to move key parts of your businesses into separate companies. So what we'll do in this scenario, we'll move all of the trucks and assets into what we call an asset company. The asset company would then lease the use of the assets back to a trading company. Think of the trading company in its name, that's almost operating exactly as if it rented assets from a third party, okay? So therefore you're splitting some of those business risks out. The other part that we see is setting up an intellectual property company to hold the intellectual property of the business, so to hold such thing as the brand, any patents and trademarks. Okay, so this structure is great, but what we find now is becomes a bit of a challenge if you want to bring in other owners. So Jack and Diane were talking about bringing in key employees as part of the ownership group. What you would need to do is issue them shares in all three companies. The same as if the couple was going to raise capital. If they went to the markets, it would be a bit confusing because again, you would have to issue shares in all three companies. To make the process of issuing shares to staff easier, what we've done, we've inserted a holding company. So instead of getting shares in three different companies, they just get shares in one. It just simplifies the whole process. This is also the structure you would move to if you were going to raise capital. Again, for the investors, it's just simpler to understand that they get shares in one company as opposed to all three. With all of her experience in trucking, Diane is now convinced that the future of transport and logistics lies in drones. So she set up a new company called Drone Drop, which is going to deliver consumer products to people via drones. Now, because this business is so different from the trucking business, and because the trucking business is going to have employee shareholders, I'd recommend setting this up in a new structure. You'd go with a company owned by a family trust, and as the company develops, you might move to a more advanced structure to mirror that of the trucking business. So when wrapping up today, we've learned that business structuring is something that changes and evolves as your business grows. It's probably something that's very customized and needs to be, uniquely fitted to your circumstances. At the start of the video, I talked about business structuring being all about asset protection, tax efficiency, and intergenerational wealth planning. We'll probably need another video to cover off the third option. From an asset protection point of view, we learned that it's best not to hold assets in your own name and hold them in a family trust if possible. We also learned that trading in a company allows you to put a firewall between yourself and your businesses due to limited liability and separate legal entity. Where possible, hold key elements of your businesses in separate companies within your group structure. If you've got two businesses that are really separate, have separate structures for each. And we've also learned that if you've got passive assets, investment properties or other investments, hold them away from your active assets and hold them in things like trusts or self-managed super funds. From a tax point of view, we learned that as your income grows, there can be benefits from moving from a sole trader to owning a business in a family trust, and also benefits from moving from a family trust into a company because you retain your earnings at the corporate tax rate and they use those retained funds to grow your business. Okay, so hopefully this video has helped you answer the question, how to structure your business.